2020 incomplete record from your mock, from the DEB mock. So we'll just work through it as we would. So a couple of things to put in from the start. So it says on the 1st of the 1st, Safron purchased the business for 550. So that's the capital at start. So his 550 is his 550 goes in over here. Okay, and then we'll use that to work out our goodwill. However, before we do that, I'm going to put in the stuff from the bottom of the question the way I would as well, because that gives us sometimes an indication of some of the workings we'll have to do. So I'm just going to throw all these numbers in here. So included in the assets and liabilities were stock, so I'll get that in. All into my balance sheet. Closing stock 24,000. Including stock of heating oil 1,200. So that means we have to split that up. So that's 22,800. And stock of oil 1,800. Okay, so there's those two. And debtors is an asset. 33.1. Creditors a liability. And that is 14.6. Cash of 950 is an asset. Electricity due is a liability of 360. And the interest earned by the investments to date. So what we need to do there is we need to put in our investments up here. Just going to stick in an extra line for the sake of this. So we've got investments, and if the interest earned by the fund to date is 50, I'm just going to write plus 50 in my brackets, and then I will put that in over in my trading profit and loss account as an investment income. And then just while I'm there, I'm going to put in my closing stock of 22.8. Okay, and that gives you quite a few marks actually, easy enough marks. It also gives us some idea of where we're going with some of our workings later on. Okay, so once we have that done, we have to work out the goodwill of the business. So he bought a business for 550. You can assume that it's not going to be exactly worth 550. So the goodwill. So we compare the value of the purchase price, which is 550, and we take away from that the assets and liabilities of the business. So we've got 450 for premises, which is an asset, 22,000 for equipment, which is an asset, 18.5 for stock asset. Debtors is 27.8. Insurance prepaid is an asset. Creditors are liabilities, that's a minus. Wages due is a liability, so it's a minus. And cash is an asset, which is a plus. Now, that cash means that's going to affect our sales later on, just be aware of that. So the value of the business is let's tell me I've got that wrong. Well, it has to be wrong. It's going to be 699. So 450, that should be 22. So 5011, it's a bit more like it. Obviously you can't have a minus goodwill. Well, you could, but what we call goodwill. So that's 48,900 is our goodwill. Okay, that's our first sort of big working done, and there's not a lot to it. Okay, so my way of doing it would be a bit like with the service firm: start at the top and work my way down to the bottom. So the 550 with the goodwill. The next one is premises, which we know is an asset. Now we need to be seeing if we did anything with premises. Did we buy any further premises, or or can we just put the stuff in? So premises at 450. There's normally a loan to buy a premises, so it's normally in the paragraph at the bottom. So generally, you can skip to this here. So we borrowed 130, part of which was used to purchase an adjoining premises for 110. So the premises is going from 450, add on the 110, so 560. Okay. Now, just go down and see if there's any depreciation, because I can see straight away there's depreciation on equipment. So there's no other mention of depreciation. Just having a quick scan. You can always come back and correct it if there is. So that's 560 up there. So that's our premises done. Now our equipment starts off at 22,000, and then there will be purchase of equipment here. So see here, you have purchase of equipment of 25,000. So 22 plus the 25 is 47. Just make sure you haven't sold any. So you haven't. 47,000. Now, I can go down to my depreciation working. So I'm going to do that now. So depreciation of equipment, and it tells us depreciation. Equipment owned is to be depreciated at the rate of 20% per annum. It gave us a date as to when we bought this, which was the 1st of the 7th. So that means we only had 22,000 for the first 6 months of the year, which is 2,200, and then we had the full amount then, the 47,000 for the last 6 months of the year. So that's 6,900 for the depreciation. And anytime we have a depreciation, we've accumulated depreciation. So in this case, it's 0. There was none at the start. Plus the 6,900 is equal to 6,900. Okay, so depreciation as an expense is going in at 6,900. Sorry, here it is here. And then we've got depreciation of equipment of 6,900 here, which we're going to take away. So nothing too difficult about that. Stock is 18.5. Now that's your opening stock, so that never changes, doesn't cause anything to change it. So we can put that in. And then we get our debtors. Now our debtors is our sort of our first big working, which is our sales working. So debtors always ties in with sales. So we're going to come down and do our sales working. So sales is made up of credit sales and cash sales. Now also in this, there's that's purchases. I'll come back to that. So with the sales, you're looking at your credit sales first. So your credit sales is the amount you sell on credit. So creditors are the amount you sell on credit ties in with debtors. So we're looking to see how much we paid to debtors at the start. So, or during the year, or how much we received from debtors, sorry, during the year. So we received 49,800 from debtors. That might as well say credit sales there. So if that was a service firm account, that could say sales. But then you have to remember, from that 27,800 of the amount you've received is to do with last year, because you had debtors at the start of the year. So you take away your debtors at the start and add on your debtors at the end, which is 33.1. Okay, so 49.8 minus 27.8 plus 33.1, which is 55,100. Okay, so that's your credit sales. Now, your cash sales is made up of, it's a tricky one. Your cash sales is like a T account. It's your cash account. So the only way you can get cash into your business is through sales, basically. And that's really what we're saying here. So it tells us all our cash payments, but it doesn't tell us our cash lodgements. So our cash lodgements must have been our sales, right? So cash sales then, and I'm going to show you this two ways. I'll show you just the way I would do it, and then I'll show you what the T account. Your cash sales is all of your cash payments. So in this case, 152 plus 39.8 plus 82.5. And then you also have to add in your, just come down a little bit here. You also have to put in your cash drawings. So you take 70 a week by 52. So it takes, sorry, he takes, Jesus, sorry, 70, I keep, so he takes 3640 in drawings. You also would have then your cash balance at the end of the year has to be added into that. And then you take away any cash balance at the start of the year, which is 550. And that's the process for it. So it's add all your cash payments, add your cash drawings, add your cash balance at the start of the year, and take away your, add your cash balance at the end of the year, take your cash balance at the start of the year. And that'll give you your cash sales for the year. That's 152 plus 39.8 plus 82.5 plus 3640 plus 950 minus 550. So it's 278,340, which we'll add on. And that'll give you your sales of 333,440, which will be probably 10% of your exam. So it's really important you know how to do that. Now, I'll show you why that is in T accounts. So if this was a T account, sorry, I'm just going to undo that. I don't know what I did there. So if this was your T account and this is your cash account in effect, right? You would have your cash balance at the start of the year would be on the debit side. So your balance would be here on the debit side, and that would have been this number here, 550. Then you would have had all your cash payments on the right hand side. So you would have had your lodgements 152. You would have had your general expenses of 39.8. You would have had your purchases of 82.5. These are all reducing your cash, so you're on the credit side. You would have had your drawings, which reduces your cash as well. So your drawings is 3640. And you have your cash balance at the end of the year of 950. So that would mean that your account would look like this. So you total it, you'd have 278,890 on both sides. And then below the lines, your cash balance at the start of the next year would be 950, be like that, okay? But of course, that doesn't balance. There's a number missing off this side. And the only number that could be missing is your sales, your cash sales, okay? So your cash sales has to be the number to make both sides balance. So it's 278,890 minus the 550, which is 278,340. Okay, that's the reason we do it that way. So we add up all of the credits and then take away your cash balance at the start of the year, and that'll give you your cash sales. Okay. So that's our debtors one done. Now, our insurance working. Okay, I'm just going to keep on going down here. So next one you see is 3 months insurance prepaid. So that's our insurance working. So we have insurance that we pay for the year, which is 12,000, which is 1,000 a month. Okay, that is for 12 months. And in effect, it's for 12 months from the 1st of April because we had a prepaid at the start of the year for 3 months. And we know that prepaids at the start of the year we're going to add on. So that is 3,600. That's for 3 months. So we must have, we're 15 months. That means you've got 3 months prepaid at the end of the year. So it's 3 months as well. Now it's 3/12 of the amount we paid. So it's 3/12 of the 12,000. So if we're paying 1,000 a month basically, and we're going into January, February, and March of next year, well, 3,000 of it is for next year. So therefore, our expense for the year is 12,600. Okay, now really important. This insurance prepaid of 3,000 is an asset. It's a current asset. So that 3,000 is really more important because that's the one you can leave out. So that's insurance prepaid. And our insurance as an expense then is, what did I say? It was 12,600 or something. All the way down here. Yeah, 12,600 is my expense. Now I should of course be checking for drawings on that. It's always good to check for the drawings, but there's none on the insurance. Okay, so I'm off to my creditors now. So creditors is my sign to do purchases. So it's sort of done in the same way as the sales. So we've got credit purchases and we've got cash purchases. Okay, and then we've got a sort of a new thing to add in, which we'll see. So for credit purchases, so we go and find how much payments we made to creditors. Like if this was, as I said, a service, a club account or a service firm, this would say payments to credit or credit purchases or something like that, you know. So this creditors is the amount we have paid for our credit purchases. So it's 55,800. However, we owed money at the start of the year. So 18.5 of that is for last year. So we take it away. And then we will have credit purchases of 14.6 that we haven't paid for yet. So they should be included. So it's 55.8 minus 18.5 plus 14,600. Now, that is our creditors. Okay, except for one thing. And it's going to affect our creditors at the end of the year as well. If we went down and we see this, no record has been made in the books for goods in transit costing 8.5. The invoice for these goods have been received. This 14.6 isn't really 14.6. So what I'm going to do is, if you saw that, I'll just come down and I'll leave that there for a minute. If you saw that as a question one, you know that you would change stock and purchases and creditors. We can't really change purchases here because we'll see why it changes purchases anyway. So the goods cost 8,500. So closing stock should go up by 8,500. We know that with goods in transit that's one of the ones that can affect stock. So 24,000 plus 8.5 should give us 32.5. So I know now that my stock in my balance sheet should be 32.5. So I'm going to go and change that. Sorry, it should be 22.8 plus 8.5. So it should be 31,300. Okay, so I'm going to change that to 31,300. I'm also going to change it over here. Okay, so that's one thing I have to, if I'm putting in stuff at the end first, I have to be willing to go back and change it. Okay, second thing is I know my creditors are going to go up by 8.5 at the end of the year. So my trade creditors are 14.6. I need to put them up by 8.5 at the end of the year as well. So that's 14.6 plus 8.5, which is 23,100. So I'm going to change that in my balance sheet here as well. And I will also then, when I will come to do my working, this here, this 14,600 would then change to 23,100. So that 51,900 would go up to 60,400. So that's our increase of 8,500. So that's our purchases has gone up by the 8,500. Okay. So that's just what we do with that one there. So that might have could throw you off, but just think about what you would do with a question one. What does it change? It changes stock, purchases, and creditors. We can't change purchases, so it really only changes stock and creditors. And then by changing creditors, it will automatically change purchases as well. So that is our uh, our credit purchases done. Okay, our cash purchases then. Let me just move this down a little bit. Our cash purchases will be given to us in the question. This is 82,500. So we'll add those two together, and that gives you your total purchases of 142,900. And then there's always drawings of stock. So the stock drawings are 80 a week by the 52, which is 4160. Excuse me. Excuse me. So we'll just take them away. That gives you 138,740 for our purchases. Okay, so 138,740 up there. All right. So at that point, I can actually work out what my gross profit is. I might as well while I see those numbers there. So that's probably the hardest couple of our workings done. So next one is wages due. Now we know wages due ties in with general expenses. We just make sure there was no general expenses in the drawings. So I'm just going to do my general expenses now. So we have to take away 2850 from them. So just check that, make sure wages there was no wages here yet. So that is minus 2850 here. So the general expenses is 39,800 minus the 2850, which is 36,950. So that's that one done. Cash, you don't do anything with. You use that cash already to work out your cash sales. Okay, so I have a lot of it done now. So we're into the sort of the end game in this. We put in all of these things if they haven't gone in already. So the lodgements of 152, that's contra entry. It's that one there. So we don't do anything with that. General expenses we've done, purchases we've done. So next one is light and heat. There'll be a light and heat working because there'll be drawings on it. So we've got our light and heat of 13,800. We know, is there a stock of oil at the start? There's not. We know at the bottom we've got electricity due and we've got a stock of heating oil. So we take away our stock of oil of 1,200 and we'll add on our electricity due of 360, and that gives us our light and heat used. So if we were finished if there was no drawings, that 12,960 would go in, but there's nearly always light and heat used. 20% of the light and heat used is drawings. So that's 2,592. So the light and heat is 10,368. Okay, so that's our expense. Okay, it's a stupid number, but anyway, it is what it is. 10,368. Now, I'm going to do my drawings working all at the one time. Obviously, normally I'd have the drawings working open and just putting things in, but just for the ease of this, I'll do it at the end. So We've done our annual premises insurance, we've done our creditors, we've done our equipment, we've done our interest. Well, we haven't done our interest. I'm going to come back to that when I do my loan. Okay, so my loan will all be down here. I'll do my loan and loan interest in that. So rent for 1 year is 24,000. Now, there's probably an expense in this. So we could enter as drawings, or there could be anything on it. So the rent was in respect of an adjoining building rented by Safron on the 1st of the 10th, 2019. So of our working, and this is a tricky enough one, the rent payment for the year is 24,000. Okay, now he rented it on the 1st of the 10th, 2019. So, but before we do that, we're going to say that this is only done this way. We're going to say that 1/3 of the building is used as a private residence. So of the 24,000 he pays, drawings comes first on this, right? So of the 24,000, 8,000 is for the private residence. So that means his expense, his business expense, is 16,000. All right, so that 16,000 is for 12 months. The business element is for 12 months. It doesn't really matter what the 8,000 is for. It's nothing to do with the business. So the business expenses is for 12 months. Of that 16,000 then, 10, 11, 12, 3 months are for this year. And 9 months are a rent prepaid. So 9 months are rent prepaid, 9 out of 12. So we take 16,000 and we multiply that by 9/16. Or sorry, 9/12. And we get 12,000. So 12,000 is a prepaid, and that means the expense is 4,000. Now you could just take that, split that up. You're just basically splitting it up 3 months and 9 months based on the fact that he's renting it on the 1st of the 10th. So the 12,000 is a rent prepaid. So rent prepaid is a asset. Got to run out of room on the assets. So that was 9,000, I think. Just go and check that again. Sorry, it was rent prepaid was 12,000, and then the 4,000 was rent. Okay, and we've dealt with the drawing aspect of it already. Okay, so there's quite a lot in that. That was probably worth quite a few marks as well, marking scheme wise. So just again, what we did, split the 24,000 up into what's drawings and what's business expense, and then deal with the prepayment after that. Okay, college fees 6.2. There'll definitely be drawings in that. So 70% of the college fees for his family member, and the remainder is for an employee. So the remainder of the college fees is an expense. So 30% of the 6,200 is an expense. The remainder is drawings. Okay. All right. So um, that's our college fees done. Now, often you'll see the college fees and the general expenses lumped together. I never do it that way, but you might see that in some of your answers. Standing order for charitable donation, that's your covenant. There can't be drawings in that. And that is 3,000. So you're given 3,000 each year. Debtors is done, cash is done, and the EU grant is capital introduced. So we're nearly there. We just have our loan, our bank, our loan interest due, and bank to get done. So in effect, one working. So I'll keep on coming down here. So Safron borrowed 130,000, part of which was used to purchase an adjoining premises. At that stage, I just want to see how he's paying it back. So it's repaid in one lump sum. So the full 130,000 can go into your loan. If it's been split up in installments, some of it would have to go into current liabilities, but it's not. So the 130,000 goes in there. Now the loan interest then. So we've got he's borrowing it at the rate of 6% per annum. So he's paying 6% of 130, and he got the loan on the 1st of the 9th, so 9, 10, 11, 12, so 4 months. Is 2,600. So that's the amount of the expense. So we have to do two things here. We have to work out what's due. So the amount that's due is loan interest minus, for the year minus whatever you've paid. So you go back up to the one we skipped, so the 1,500, and that gives us 2,600 minus 1,500, which is 1,100. Okay, so 2,600 minus 1,500, loan interest due 1,100. All right, so that can go into your current liabilities. Now, of the loan interest, some of it's going to be for the private section of the business. So we go down and check. It's normally down here. Safron estimates. Where is it? Oh, there's none of it. So there's normally drawings on the loan interest. There's not in this case. So the 2,600 can go in as your expense, and the 1,100 into your loan interest due. So that's all that done with. To provide for it, the bank was to transfer 1,000 on the last day of each month from Safron's business bank account into an investment fund. So uh, that's going to be the investment. So 9, 10, 11, 12. So 4 months by 1,000 will be 4,000. So your investment will be 4,050. Okay. So you've got 4 by 1,000 and add on the 50 to it. And that's that dealt with. We've done the rent. 1/3 of the building was used as a private residence. We've done that. That's the rent still. 20% of the light and heat. We've done that. 70% of the college fees. So we've done that. So at that point now, I want to do my drawings working. Now I would ordinarily have this open from the start. It's a couple of workings I would have open at the start. So I've got my stock. So my stock drawings are 80 by 52. I've got my cash drawings, which were 70 by 52. I had my rent, which was 8,000. So 1/3 of it was from the private section. I had my light and heat, which is one of my first workings. 2,592. And I had my college fees, which was 70%, I think. So, yeah. So 70% of the of the 6,200. So my drawings then, that's that one finished. So we'll just add them up. Just make sure you're probably shaping them. Maybe I've left something out, but again, what I would always do is I'd have that working open. I'd have that working open as we're doing it, and then put them all in as you come across them, rather than have to come back to it at the end. It's the quicker way. So anyway, drawings is 22,732. Remember, that's a minus. We've done our equipment, we've done our goods in transit, and we've all these numbers in, and we've corrected them. So it just leaves me to work out my bank working. So my bank working, again, I would do this. I think I would have this working open from the start, and every time I come across a bank number, I will put it in. So my bank working, I put in all my lodgements on the left. If there was an opening bank balance, which there really shouldn't be, that would also go in. But I would put in all my bank lodgements on the left. So I've got my 49.8, cash of 152,000, and EU grants of 10,000. Okay, I put all my bank payments on the right. So all my bank payments are 13.8, 12, 55.8, equipment 25,000, interest of 1,500, rent of 24,000, college fees of 6.2, and the charitable donation for 3,000. So then you're saying, well, what else have we lodged money into our accounts for? Well, we've lodged the loan. So the loan goes in. The loan was for 130,000. But then he used the loan to buy a building, so the building is 110,000 on this side. Next thing, has he transferred any money out for an investment? Because that will come out of the bank account. But we know he's transferred 1,000 a month for 4 months, so that's 4,000 in there. So that should be all of our bank. So it's all your lodgements on one side, plus your loan, all your payments, plus your investment fund on the other side. So if we add up the debit side, it should be bigger than the credit. There's no reason why it has to be. That's 341,800. So then if we have this as 341,800 and then take away all of these, that should give us our bank balance of 86,500. And that's our asset. So we're going to put in that 86,500 into our bank. Now I've completely run out of room here. So 86,500. Okay, so that should be everything in. Again, we'll find out soon enough. So we just have to finish it off. So what we do is we we'll finish off our trading profit and loss account by adding on our incomes, your investment income, and then taking away our expenses. So that's 6.6. So I've definitely done. Sorry, definitely done that wrong. That's a minus. So that's 129,272 as our reserves, or our net profit, or whatever you want to call it, and that's going to come over into our over here. So 129 270. Okay, so all right, we'll do our assets, and just to make sure we get full marks here, uh, we'll add them all up. And we're adding, don't forget when you add up your assets, it's your goodwill plus your fixed asset, your tangible fixed assets plus your investments. So 653050. All right, then we move on to our current assets. So there's loads of them, more than most normal questions. So 168 650. 13 stock of oil. Let me just check these. There's so many. Stock of oil is 1200. Just making sure I remember to change my creditors as well. They look right now. So your creditors, we did change that 23.1, so they should be right. So we'll add them together. Hopefully this is going to work out. 24,560, which we'll take away from our current assets, and then add on to your fixed assets. That adds up to 7,56540. Okay, when we do my capital and reserves, so we've 665,540 and 130. That's going to work out lovely. Your capital employed is 796,540. Okay. For 8 marks then, explain the importance of double entry bookkeeping for Safron. Double entry bookkeeping makes sure that he keeps an accurate set of accounts that were for every debit there's a credit. It reduces the number of errors because it produces a trial balance at the end of it, and it also allows for any errors to be traced back to their initial part. And they're a fairly important part in the preparation of financial statements, anything like that. Explain the term entity. An entity is that a business exists in its own right, separate from its owner. So a business entity is the fact that it's this idea of sort of continuative existence, whatever that the business operates in its own right. It is not the person in itself, and it can sue in its own name. It's clearly defined from its owners, and it means that if you're a sole trader, once you have the concept of an entity involved in your business, you cannot account for stuff that's for your private use. That has to be accounted for as drawings. So once you have a business entity, it means that there's drawings involved. All right, that's that, lads. We'll get a few more of these up as we go.